Hello everyone. This is the pre-market report video for today, 28th August 2024 for the Indian stock market in terms of Nifty and Bank Nifty. For a second, please pause the video and have a look. This is how volatile yesterday's Nifty's price action was. As it is, it looks like crazy volatile, but in reality, that's not the case. It was very much flat. On the positive side, it went up to 0.3% and on the negative side, it was down till 0.2%. So 0.2% and 0.3% together, it just 0.5% difference between the day's low and day's high. Contribution wise, there was a mild negative in the energy and metal stocks, but however, that was compensated by the mild positiveness around 0.5% in the financials. Other than that, sector wise, FMCG dragged down by over 1%. And media increased over 4%, mainly because Zee Entertainment share price increased 15% as they agreed for the settlement with Sony and also for terminating their deal. Regarding FMCG wise, there was a report released that India's FMCG sector is still paying the pandemic price, and unlike the V-shaped recovery in many sectors, FMCG is having the K-shaped recovery, meaning some parts like urban recovered whereas rural side haven't recovered at all, which in turn yesterday affected the whole FMCG sector on the downside. Moving on, in the future market, the overall open interest haven't changed much. It dropped very slightly 0.1%, so unwound marginal. Here the top table represents how much of the index position each group held in short and long position, and bottom table represents how much open interest it changed compared to Monday. In short, yesterday proprietary traders shorted the index future by 16.5%, out of which was bought between DIA and FII. Whereas in retail traders case, they closed 5% long and 1% short position. Overall, at present, FII holding 58% index as long, meaning they are expecting the positive run. On the other hand, proprietary traders holding 57% short open interest, they are expecting the negative run. In between, retail people just exiting the position. Who is correct? Only time will tell. Then about India VIX, it opened higher, but for most part of the day, it was marginally lower and ended the day with lower as well. So yesterday, there were slightly more number of sellers in the market than the buyers, and hence we can say little bit above 50% sellers drove the market. If required, please pause and have a look. Overall call option open interest increased by 2%, whereas put option open interest decreased by around 0.5%. And if you see little bit more in detail, FII increased their call option selling by 2.5% and decreased their put option short open position by over 2%. Hence, combining the VIX and the change in open interest, we can say around roughly 52% market tilted towards the negative and equally big 48% favors the positive run. Disclaimer, please don't take any trade based on this. I'm just conveying how I analyzed the open interest. About institution, as per NSE trading activity data, for the fourth session in a row, FII was net buyers. They net bought for 1,500 crore rupees, and even as per NSDL data, FII were net buyers, but the net bought slightly less, near 970 crore rupees. In case of DII, it's just NSE data, but after 16 trading sessions, DII was net sellers. The net sold for roughly to 1,500 crore rupees. So those were the quick takeaway from yesterday's India market. Now let's move to the US market, and it was not much different from the Indian market. S&P 500 opened 0.5% lower, but it quickly recovered and it just moved between positive and negative, then finally closed mild positive. Throughout last night, US market was nervous, waiting for this Nvidia business update, which is due to release tonight, and PC inflation data release on coming Friday. So all three US major index closed mild positive. Dow Jones closed flat, S&P 500 increased by 0.16%, whereas Nasdaq increased by 0.17%. In case of VIX, it dropped by over 4% and moved below 15.5 from above 16. In line with that, GIFT Nifty also today early morning closed near flat 25,012. equating it with the Indian spot market is indicating flat to positive opening. Then regarding Indian ADR, as it is both the sectors, it was very much mixed. ICICI Bank and Infosys both increased above 1%. However, HDFC Bank and Wipro closed mildly negative, which means flat to positive bias. Then if we calculate the arbitrage, only ICICI Bank was mild negative. Then all others got the arbitrage of positive 0.2% to around 1%. Here the important thing is, yesterday in the Indian market, Reliance Industries closed 1% negative. But in GDR, it reclaimed those drops. So now it got the arbitrage of 1% positive. So overall, except ICICI Bank, all the ADRs and GDR are positive. About oil, I don't know why and how, but as per investing.com, there was an increase in demand concerns in both US and China, which in turn made the oil price to drop by 2%. So at the time of this video, WTI crude trading at $76 per barrel and Brent crude closed at $79 per barrel. As a summary, US market closed mild to positive. GIFT Nifty and Indian ADR also indicating the flat to positive trade. However, the volume open interest analysis very marginal, slightly tilting towards the consolidation with negative bias. About the things to look out, at 11:30 am, Germany's Consumer Climate Index is due. Then at 3:30 pm, France jobs data, Euro group meeting are scheduled to release. Then for US, crude oil inventories and 5-year note auction are some of the items we need to keep an eye out today. Coming to technical, as I said, it was very much flat and range bound. Thus on the daily chart, Nifty formed a small doji candlestick pattern. And thus now we can see that the sentiment has entered into an indecisive phase. But technically, Nifty exhibits a strong positive structure. I mean, in the last 8 trading sessions, no single day's closing was below the previous day's low, which in turn indicating a sustained upward momentum. And also, daily chart RSI value is firmly above 60, which all solidifies the Nifty's positive stance. Hence, as a result, Nifty is likely to remain range bound or might experience a slight dip in the near term. On the lower end, 24,800 could act as an immediate support, while a rise above 25,100 might push the Nifty towards 25,300. In case of Bank Nifty, similar to Nifty, it also opened with 70 points gap up and touched 51,400 during the day. However, selling at higher level erased some of the intraday gains, finally closed at around 51,280. Thus on the daily chart, Bank Nifty formed a small bullish candlestick pattern with minor upper shadow and long lower shadow. I mean, finally, Bank Nifty has broken out of its downward sloping parallel channel and is now consolidating above its previous trading range. And in addition, after a long time, it outperformed Nifty, all signaling that it's starting its next upside move with a solid base support around 50,700 to 50,800, where 50-day exponential moving average is present. Regarding the monthly options data, the maximum call option open interest was at 26,000 strike, followed by 25,000 and 25,500, with maximum new call option writing at 25,300 strike, followed by 25,050 and 25,000. On the put side, the maximum open interest was at 25,000 strike, followed by 24,000 and 24,500. with maximum new put option writing at 24,400 strike, followed by 24,700 and 24,300. Thus, from options data, Nifty's immediate resistance is at 26,000 with support at 25,000 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.